Hello viewers, we'll be going over gold miners, ETF ticker symbol GDX. In this video, we'll be going over the day-by-day probability model, technical performance, how we find the models, and the forecast for gold miners in the next coming days. So back to the technical analysis. Today we're up 19 basis points on the 1-hour chart. We start to see a reversal on the 1-hour MACD. We see a convergence and we may approach to positive MACD on the 1-hour chart. If we expand that further to the 4-hour chart, we see we're still approaching to negative MACD, and we may encounter resistance if we do make a reversal, and that resistance is seen on the daily chart. At the moment, we are encountering the 18-day moving average, or this purple line, as our resistance, and we did try to break above the 200 moving average, this green line. We failed to break above it, and that is also acting our resistance as well. So if we do manage to head up higher, the next resistance was that 200-day moving average that we attempted back in March 26 at around the price of $27.30. And as for support, if we do head down lower, we made a small immediate support around the range to $20.50 between March 18th and March 20th. So that is our first immediate support. And if we do manage to fall down lower, that price movement is roughly around 13.8% to the downside, and to the upside to hit resistance, it is around 13.8% as well. So we are currently in between. I would say we may get another spike in volatility very soon. So it could be either to the upside or to the downside. So do keep that in mind in the next coming days. So back to the day-by-day probability model. Again, this model is now available in the link below, so do check it out. So as we progress to the 7th day, we have a 25% chance for gold miners to climb higher between 0 and 12.5%. On the other hand, we have a 25% chance for gold miners to fall between 0 and negative 12.5%. And on the extreme case, we have a 25% chance for gold miners to fall between negative 12.5% to 25%. And on the extreme case, 25% chance for gold miners to fall between negative 25% and negative 39%. So let's examine day-by-day forecast for GDX. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to June 4th, 2008 to August 28th, 2008. So let me point out why these two charts are similar. So what we have here in the current trend, we start off touching the upper Bollinger Band immediately, and then we have our second peak right here. After peaking twice, we see a sharp reversal to head down and touch the bottom Bollinger Band. So after touching the bottom Bollinger Band, we see a reversion to the mean back to the middle Bollinger Band, and we are currently encountering resistance at that level. So in the trend in question, we see a similar pattern touching the upper Bollinger Band here as well. Our first peak there, and our second peak next. And after our second peak, we do fall lower, averaging around the bottom Bollinger Band levels as well. And then towards the very end, we see a resistance while we revert back to the mean to the middle Bollinger Band, and we have not broken above it. And at the moment, we have 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. And one thing to note, one difference that we have here is on this trend, we have it touch the bottom Bollinger Band, and below it, we were only touching the middle Bollinger Band. So do take that into consideration. And the trend back below, The trend that we just examined was June 2nd, 2008 to August 26, 2008. Back then, gold miners was down around, I would say, 13 or 14%. And if we head back to the day-by-day probability model, that coincides with this standard deviation of 25% chance between negative 12.5% to negative 25% chance. So back then, gold miners continued to fall down lower around that range to negative 12.5%. And if we examine closely on the technical performance, if we examine the current trend, we are currently down 29% from monthly high, up 21% from monthly low. We are up 3.5% from 10 simple moving average, down 1.6% from 20 simple moving average, and down 11% from 50 simple moving average. And the trend that we just examined was June 4th, 2008 to August 28th, 2008. We were down 34% from monthly high, up 9% from monthly low, up 3% from 10 simple moving average, up 1.6% from 20 simple moving average, and down 11% from 50 simple moving average. The only difference was the 20 simple moving average. We were positive up on the trend in question, and in our current trend, we are down 1.6%. So do take that into consideration. Again, this model is now available in the link below. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.